Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks, and a great night. You are responsible for your own happiness. Happiness never comes from outside of you. If you put your happiness in someone else's hands, they can always take it away. Happiness can only come from inside of you and is a result of your love. Market-wise, let's take a look at it out here. We have the Dow Industrials down 125, NASDAQ off 19, S&P's off 11.5. Let's go take a look at the volumes out here. So you get summer trading, bottom line, you get some rough markets. Guess what, folks? They put volume into this market on the way down. Pretty amazing, actually, because we're watching this closely coming into the close. We had all of 403 million, 10 minutes left in the marketplace. Right at 4, we had 505 million. They dropped 240 million into this close. They don't want to be in this market right now. We did 745 million shares in the NYSE. On Friday, we did 852. So bottom line, that is a decent number and a big number into the close. NASDAQ Composite, not so big. 1.8 billion we did. Gold contract, they took that baby south with volume. Gold is trading at 1,200. If we go over and we take a look at that contract, what you're going to see, you went down today. You had volume on the move down, 360,000 contracts, big contract volume. This is an ABC structure on the way down. It's taking a B point out. The A point on this, it's not a monster one. Bottom line is, though, that gold hasn't been able to catch a bid since April 18th. April 18th, gold was at $13.77. You're $177 off of that level. Your A point on this is $12.44. Your B is $12.12. So what? 12, 24, 30, 24, 36. Yeah, you get 28 bucks. 28 bucks gets you down to 11. Oh, this is pretty cool, man. It's 11.97. We hit 11.98.60. Okay, we'll see where this shakes out. Silver also took a hit in the way down. Silver also broke a swing point, has volume on the break. Silver was down 2%, 31 cents today. Silver also hasn't caught a bid since the highs in April, in June actually, $17.43. We come down, we do 100,000 contracts out here today inside the silver market. The A point on the silver market is 16.26. Your B is 15.18, so we're talking about $1.10, which lines you up at approximately $14.80. This is pretty cool, okay? Meaning, what the cool part about it is you're not far from the A to B equals C to D structure. Right now we hit 14.97. You go over to the GDX, XAU, HUI, they all broke lower. The GDX is down 58 cents. You're trading $19.98. You get your swing point down here at 18.58. Now, it's going to take monster volume to break this. We did 1.7 billion. Oh, actually, let me do this on a weekly instead. I had it on a monthly. So we did 543 million. We did 70 today. It's not going to do the volume this week, but the bottom line, we'll see. Well, it's the beginning of the week, too. Doesn't mean it can't expand. Bottom line, you're coming into that swing. We'll see whether it holds. The XAU and HUI, they both, I believe, did not hold. We came down to 225, $71.61. And the XAU, that low there was 71.63. Oh, my God. Okay. So this is what we did. You're a penny underneath it right now. It's going to have to break further than that to actually break down, but that's the XAU. Gold Bugs Index had broken down on Friday. This broke underneath it on Friday. This is in tougher shape. The number inside the Gold Bugs Index is 160, and right now you're at 154. So that does set up, that sets up about a 147. Inside that Gold Bugs Index. Big numbers. Notes and bonds, they continue to want higher prices. Pretty amazing, actually. That's the real bottom line. But guess what? They're buying the notes. They're buying the bonds. We got to a higher price today. You had volume behind the move. You had it all. It makes sense in the context that, number one, you have more demand than supply, meaning as we're rolling our bonds over. King dollar is down 18.6. King dollar did hold price out here. Right now, King dollar is trading at 96.200. And if we do put this on a continuous contract, what you're going to see, King dollar was trying to take out the swing points from October of 2017 for quite some time. They started to try to take this out in June of this year, took it out. And, you know, we didn't take it out with volume, but we took it out with pretty good price. So King dollar right now on the continuous contract would have to get back inside the 95 area to be a failure. It looks to me like we can get up to the 96.695 area. Right now you're at 96.190. The lira over in Turkey, that continues to implode in a big way. Pretty amazing, actually. We're trading right now at 690 lira dollars to $1 US. And, you know, there's no telling how many other implosions this baby is going to take. What we do have technically is this. So when you look at this, it's like, okay, if I do a correlation or an ABC correlation even without the volume, what you're really looking at is, let me see, 3.7. I'm going to do this at the first break. And where I'm going with this, folks, is this. When you do a expansion or contraction that is more than a 1.618 of the prior move, most times what you see is that those are blowout moves to the downside. They're blowout tops to the upside. And in this particular case, I suspect we'll find out whether we got a 1.618 or, in fact, we have a 2 to 1. And if that's what you got, you know, I expect you're going to see more than likely some turnaround. That being said, what we haven't seen yet is that you haven't seen who's holding the bag out here. You know, we have seen a couple Spanish banks that go south in a big way. European banks, they could have some problems. But what I expect you're going to have, there's going to be something that comes out of nowhere, or it comes out from another emerging market currency that turns into problems in paradise. Stay right there, folks. Come right back.